this also gives you an idea of that, okay, the market is trending down. Or you can just zoom out and see the entire trend, right? This is down, so you're only looking at market popping above the Bollinger Band and then riding back down. Okay, so those are the only entries that you're going to be interested in a downward trending market. So this is all done on an M1. And now on the M1, your expiry is going to be on a 2-minute, right? So meaning, let's just take this one as an example, right? I know it's not perfect, but let's just take this one as an example, right? 1, 2 candles going up and sketchy bearish around it, and then the market just dipped lower, boom, closed over there, right? So that would have signified your entry on this. Okay, now you can see that the market proceeded to go down, but you're not looking for the entire downward move. You're only looking for the next 2 candles. That's what you're trying to predict, where the market is going to close below the strike price of 79.836, right? So in this one, I think it might have been a close call. Depends on what type of broker. Okay, yeah, I think the Wi-Fi is acting up, disconnecting me as well. All right, so because that's really how then the money is actually made, by getting that consistent, those consistent winners. Okay, are you seeing my screen? Okay, great. Right, so that is the haram, and that is the actual pattern that you're going to be looking for. Now, there's a couple of other things that need to be in play as well to solidify the actual trade setup itself, right? For one, you're going to be looking at either the stochastic or the TDI as a confirmation. Okay, now there's overbought and there's oversold conditions. Now you're just using this as a way to, I don't know, help your mind adjust or get additional confirmation on the trend direction. I don't use it anymore. Okay, but obviously when you're starting out with this, it's always advisable to actually use it, because it does help you to stay out of a lot of the noise that's going to be in the middle, right? So sometimes it stops you from getting into some good trades as well. But I mean, well, decent trades, not good trades, but better that than getting into a sketchy trade. Right, so also over here is the timer. Now what you want to do is, depending on which time frame that you're going to be trading, you want to enter the trade, especially on the lower time frames, 20 or 10 seconds before this candle actually closes. All right, so let's say now we're looking at this market over here, right? You can see the price, strike price will be 73.74. Okay, now I know that forex brokers and binary brokers usually have different pricing. It's not huge difference, but if you continually scalping on a 1 minute time frame, it does make a bit of a difference. Not a huge one. You won't lose money because of it, but they will have difference in prices, because there's spread involved also in the forex, and there's no spread on binary options. They just take your money directly. Well, at least the brokers in forex, they just skim it off charges and stuff like that. Right, so you can see that this market is in a downward move, and now this is 57 seconds, right? 57 seconds, and you're expecting the market to close. So when this candle goes up like this and it turns wide, 10 seconds before it closes, right, you'd be looking at placing a call for like 2 minutes. All right, you with me? So right now it's sitting at 30 seconds. So as soon as it says 10 seconds remaining, then you'd be placing your option there. Okay, so we'll get into the practical side of things tomorrow, and then I'll be able to we'll be able to take a couple of trades, like perhaps 4 or 5 trades. But we might need to push it back to around the session to around 9 if we're going to be doing that, because that's the better time for the trades to actually come in. Right, so we have this white candle there developing. Now I know this is not the Harami, bullish Harami, but just as a practical example, right? This is hopefully a demo. Okay, now then you'd be waiting for the next 20 seconds to see how the candle actually closes. All right, 15. All right, you can see it's pulling back down again. All right, now if it closes below the 6 moving average, which confirms then the entry, then we discount that trade. All right, but if at 10 seconds, okay, there we go, there would be the entry. Okay, probably would have entered, call for about 2 minutes, so you expect the price to rise for the next minute or so, right? And then obviously you just sit on your hands and watch the trade develop. But this one